What is up, everybody? I thought today I would make a video on how I journal my trades because a lot of people, I think, when they journal, simply put in their trades. They want to see what their win percentage is, see what their risk reward is, and that's it. And I have learned through many years that journaling is quite possibly the most valuable part of your trading. You essentially have your own textbook of mistakes, of great trades, of strategies that are working, strategies that aren't working. You can use so much when you journal to really identify where your edge is and to make improvements. And I'm going to show you some of the things that I do on a daily basis to identify that and to help me become a better trader. So in this, I'm going to show you. I'm going to use Excel, where I'm going to show you, my journaling of my actual trades. I'm going to show you how I use Evernote to also um, build sort of like edge knowledge, I suppose. And yeah, just go through and talk about the sort of things that you should be looking at when reviewing your trade. So to start off with, this is my Excel spreadsheet. It is fairly simple, but there's a lot of automated stuff in here. Things like the exit is automated, the P&L is automated, whether it's a winner or a loser is automated, and these sort of things. I'm not going to go through how to do those in this video because it's pretty dry and you can kind of figure out yourself. There's a lot of the time you just have to kind of spend a bit of time on Google figuring out. If someone wants that, then just let me know and I will make a video on that, but it will be long and dry, so not that. But what I do is every single trade that I take, I put in the date. I have stock here because I used to trade stocks, but this is going to be NQ the whole time. I then put in whether I'm using a support or resistance, whether I'm getting in a flag or a breakout, whether I'm long or short, the time, the size, the position size I take, my entry, my risk, my two exits. This is all very basic stuff. Like this is whatever. Like this is the bare minimum of what you need to put in. But then what I have is where the real value comes in. So first of all, I have I'll show you this cool little trick to put in screenshots of your trades. So we'll come down to today's trades, and we can see my first trade here. I took a short that didn't work out. Second trade, I took a short that also didn't work out. Third trade was a short that did work out, and the final trade I took, I haven't put in yet, but it's a long that worked out, and I'm going to show you how to do that. So if you want to put a screenshot in so that you can hover over a trade and immediately know what it looks like, which I think is honestly so valuable. I can look back and go, okay, I made a mistake here. This felt like it was early. I can then look at it very quickly and go, yeah, I probably was a little bit early on that. Or here, okay, it's C-grade trade because of the time of day. Okay, what did I do? Oh yeah, that is really late on the day, and so on. You can review that. The way you do that, you go onto the cell, you right click, go to insert comment, and then you want to move the cursor until it is over the edge, and you get this four arrow. So not not this four arrow icon. Right click again, go to format comment, and then you're going to come up and you'll probably say something like font to start off with. You want to go to colors and lines, and then where you have the color, you go to drop down menu, fill effects, picture, select picture, and then for some reason mine now comes up and says, do you want to use the internet, Bing search, or do you want to use your own? It's taking a little bit of time sometimes. I think that the more pictures you put into one Excel spreadsheet, the slower it can get, but I'm going from file because I've saved them to my file. And then we can see trade number 4 is this one here. We just put it in, click OK to all of those. And then you have this. And to make it this, to keep it the same aspect ratio, just hold down the shift button, drag it out to where you want it. And there you go. And there you can see my final trade of the day, which was a little bit fortunate. Actually, I got a little bit early, but it did work out. So why do I have these pictures? And I kind of already went over it. I want to be able to see when I make a mistake, what that mistake looked like. I also want to be able to identify, like this trade here. Okay, I made 41 points on this trade. It's an A grade trade. I've noted it as a perfect trade. So now I want to see exactly what that is. And then from that, I can then begin to go, okay, this is a perfect trade. What are the traits about this? And I can see we've got a really clean double bottom at the pre-market lows. Price also kind of held at the low. We clearly got above the 50 EMA. The flag was really nice. We got a good entry and it ripped afterwards. Okay. So you can begin to, go through and say, look, another one here, another big winning trade. Very similar setup. Surprise, surprise. Another big winning trade here. Another similar setup. So this is really helping me gain a pretty good understanding of what my best setups look like. And in the current market, it looks like it's going long off of after holding a support area. In fact, every single one of my big trades is a long of support. A lot of people talk about whether they're better at going long or short. I personally don't care. I think it just more depends on the market you're in. If you're in a somewhat bearish market, you're probably going to find shorts working. If you're in a bullish market, longs are working. So I think that's a bit of a non-stat, to be honest. Now over here, I have my grading system, and I grade my trades A, B, or C. If it's an A, essentially, I executed my plan how I wanted to. I waited until I had a situation where I believed I had an edge. I got in at the right point, and I took my, either I stopped out where I should have done, or I took profit where I should have done. So these A grade trades, beautiful. They're all well done. A B grade trade is a trade that in the moment I went, this is definitely my edge, and you can even see here this note I've put. This is now 1,000,000,000% my situation, and so on and so forth. And I'm actually going to change this note here. So in the moment I thought that this was a good trade. On review, I then realized that I'd made a mistake. Now I can't grade this as a C because I figured, hey, this is probably a good trade. In the moment, I was like, yep, this is all good. There was nothing that was telling me this is a bad trade. So therefore, B grade trades, I think, are the most valuable ones because this is where you can gain knowledge from. Most traders make B grade trades when they're not certain of their edge and they just take it anyway, and they have to learn from that. If you don't journal, you won't be able to see where you're making these mistakes. So when I journal, I can straight away look through and I can find my B grade trades and say, okay, what was the mistake here? Okay, the setup wasn't very good here. The entry, okay, so the reason I didn't like this is in the moment I thought it was good, but when I look back, I realized I was probably in a little bit early in terms of looking for a momentum move. Now look at this B grade trade, and again, this one's actually probably a fine trade, but it felt a tiny little bit early. This one felt a little bit early, and then this one also a little bit early. So all of these trades, on review, I went, and maybe it was immediately afterwards, after I got in, I went, you know what, it feels a tiny bit early, but I'm not exactly sure why it feels early. So I then need to look through that and go, okay, can we understand why this feels early? This is obviously my biggest issue right now. So that's a big thing. Now my C grade trades, and these are the ones which I class as real mental game errors. These are the ones where I take a trade that I know I shouldn't have. So this first trade, this double top, I knew I shouldn't be trading this. There was a small part of me that went, I don't think this is good enough. But what I did was I then talked myself into it. And I'm going to get onto a little bit later on gray areas and how I resolve that. And this was a really good example of a gray area. I didn't feel like this double top was good enough for me, but at the same time I wasn't sure and I didn't want to miss the trade. So this was triggered by FOMO. And the FOMO was a result of me going, I probably shouldn't trade this, but I'm not 100% certain. And that little crack that I'm not certain led to FOMO. Okay. So this was a trade. Essentially, C grade trades are the ones that you can look back at and you can go, there was a definite moment where I could have gone, this is not a trade. I should step away or I should just watch and let this play out. So real quick recap, A grade trades, perfectly executed. B grade trades are where I've made a mistake that in the moment felt right, and when I look back, it wasn't. I also put in things like if I get out of things a little bit early when I know I shouldn't do, I can put those as a B because the execution was good, but maybe I should have, I got out of them a bit too early. So it's a smaller mistake. And then C grade trades are ones where I knew the moment or even before I took the trade, I shouldn't be doing it, and I did it anyway. Now, the big thing is you can review over time how you're doing. So in my recent trading, I've only had 2 C grade trades, which is really good. These are the very much avoidable ones that you go, okay, this can't be done, a lot. I've only given up, 33 points, which is $600 due to C grade trades. That's not too bad given that I've taken 27 trades. It shows that more than 94% of my trades are either A or B grade trades. So a very small percentage of my trades right now are C grade trades. But if we go back, we can see that in a previous journal, I had a lot of C grade trades, right? I have 1, 2, 3, 4, 5, 6, 7, 8, 9. And this was really what alerted me to going, hang on, there are loads of times that I'm going, I don't think I should take this trade, and I end up taking it anyway. The big problem is the I don't think I should. And the I don't think was critical. We'll get onto that in a little bit. So, okay, grading system, great. We can use it to compare. We can see how over time we've had good stretches, how we've had bad stretches. We can begin to compare, some of the performances. So you don't just go, oh, I'm trading really badly right now. You can go, well, over the last 50 trades, I've actually traded pretty well, or whatever. What else have I got on here? So I have these notes, and these are more in the moment that I write them down. I don't really look back over these, which is why I don't really like using big blocks of text. This is more me kind of venting in the middle of a trade so that I'm not, overthinking things. I just throw them out into this note. And sometimes I might look back and I'll go, okay, this C grade trade, what were my thoughts in the time of day, but this is the best looking setup I can get, so I'm going to try something out. Okay, so I was clearly maybe tired at this point. I was making up excuses. I'm using this account as a fear builder. So it's very much a case of look at the excuses that I used. You can use those if it's a mental game issue that you see over and over again to then actually start to resolve that. So these can be useful, but don't use them all that much. I also note down my key mistake, and this is important so that when I have larger samples, so if I go back to this one here, I can sort these and I can find out what my most common mistake is. This then means that you can go, okay, where am I losing the most money? Well, it's because of this specific problem that I'm doing. We're going to resolve that one first. If you don't journal, you're not going to know that. So it's really important that you have something that is identifying what the key mistakes are. And we can see here, these two, not my situation. Since then, I haven't actually had that mistake reoccur. And again, we're going to go on to gray area trade in a minute. Finally, over here, I have my data collection. So this is total trades, winners, losers, average winner, average loss, win percentage, risk rewards, accuracy. So all these other numbers, winners, losers, these are all pretty straightforward. They're whatever. And total profit as well. Accuracy. I grade my trades 0 or 1. If it's a 0, it's a C grade trade or a B grade trade that was I got in at the wrong point and I took a loss because of it, right? Sometimes it might be I take a win because of it, but if it's a C or a B, it's most likely a 0. There are a few times where, like this here, it felt like it was too early, but on review, I think it was okay, so I'm going to leave it as a 1. And there was a trade here where I got in too early, but in the end, I would have got in later on. So for data purposes, I want to include this in my in some of my data. So my accuracy is around about 81.5% over this very, very small sample. And I'm going to tell you that is really good. 81.5% is like, if I could have that for the rest of my life, I'd probably take it. You can see in the past, 45% in this journal. You can see I had an accuracy rate of 58% in this journal, 63% in this journal. So you can see that 80% is pretty good. And without this awareness of knowing what a good trade is and what isn't quite a good trade and marking this, you won't know what your accuracy rate is. And the scary thing is, after doing quite a bit of study into this whole topic, most traders, and myself included back when I wasn't really tracking this very well, my accuracy and most traders is in the 30 to 40% region. And the scary thing is, most traders with the edge that they have, they need to be executing at around about a 75% accuracy level to be making consistent profit. Probably 65% to be break even, so making a little bit of profit. Anything below 65%, you're probably losing. Probably losing. Now down here, I track my two different types of trades. So I have, I classify my entries as either a flag entry or as a breakout entry. And this is always quite kind of interesting for me to look at because I always assume my breakout trades are not as good. We can see historically though, and this is a good thing, like I go, oh, I don't like breakout trades. I typically actually have a slightly higher win percentage on breakout trades. I think correct trades. I think I make more mistakes with breakout trades. I think that was it. Yeah, so typically what I find is that my breakout trades is normally where I make more mistakes. And if I didn't, my win percentage would be higher. So this is just for me to be able to see where I'm performing well, where I'm performing poorly. And then finally, this block down here is all the trades that I classified as, yeah, that was well executed. And the reason I do this is simply to give myself an idea of what is right at the top end of possible. It's very unlikely that we're ever going to reach a stage where you can be 100% accurate. But this tells me here, this 189 points of profit tells me that this is where I could be at if I traded, I'll say robotically. My strategy, I think I can get it to a point where I'm 85 to 90% accurate. So I look at this and I go, okay, 189 points of profit. I compare it to where I'm actually at, which is 102 points of profit, and I go, that's actually pretty good. That's 55% or so of the profit. That's pretty good. So over this sample, it's gone pretty well. And then a lot of this is just other data. For a lot of people, this is probably more than enough, and it's probably more than what most people are doing journaling-wise. I've got screenshots, I've got data, I've got data on my bad trades, on my good trades. But I don't think that this is always the whole picture, and I'm going to show you how I use Evernote to give me more of the whole picture. So I have three main areas. I have EMT, which is, I call it easy money trade, so I call it EMT. Gray areas and trading diary. And gray areas is something I've done a little bit more recently, but it's been very, very beneficial. We're going to start out with my easy money trades notes. So what I do is at the end of each day, and I haven't done today's yet, is I take a screenshot of pretty much the entire market, and I put in the trades that were legitimate. So these aren't always the trades I've taken. Sometimes these are trades that I've missed. Sometimes I've taken other trades that weren't so good. But I put in the data here so that I can get a snapshot when I'm looking back through of, okay, on January 16th, 2024, we had this as the market, and there was some very clear opportunities for me. The potential profit was this, and then I can zoom in a little bit more and look at each of these trades and get a better idea of what they look like. And this gives me a very good idea of what correct trading for my edge looks like. A lot of people struggle in trading with not knowing if their trades are correct or not, and I think it's one of the hardest things that unless you have a mentor who trades your exact same strategy, you don't have somebody to go, can you look at this trade and see what you think? This gives you that. Having this screenshot every single day and looking for where the A+ opportunities were means that you can then compare your current trading to what is actually there. And the more that you do this for 10, 15, 20 days, the likelihood is in the market you're going to be able to pick up just a little bit better what is and isn't a good trade. So these are all of the correct trades on this day, on the 12th. It was a very different looking market. Okay, there was one or two A+ opportunities, so there were still trades to be had. Okay, and this for me as well is also where I kind of where this strategy was born from. I took screenshots of the market every single day, and I identified where the easiest play was. And from that, I began to identify the same kind of pattern setting up again and again. And that's how I then developed the strategy. So if right now you're sitting there going, I don't really have a clear-cut strategy, or you kind of think you do, what you should be doing is taking a screenshot, a full screenshot of every single day, and then going through and going, where was the easiest opportunity to make money? So on January 10th, I think the easiest trade opportunity was probably here. It put in a double bottom at the pre-market lows. It got above the 50 EMA, it held the 50 EMA, and then it ripped. Later on, we got another really good opportunity for a big move. On January 9th, double bottom at low of day, flag back to 50 EMA, big move higher. Understanding and looking for these big moves again and again will begin to essentially give you what you need for a successful strategy. Now, my trading diary. So at the end of each day, I will note down my mistakes. And this is really important because sometimes you go halfway through the day and you've made a mistake and you don't really have enough time to kind of like figure out what you can do to improve. Sometimes you even forget that. You go, okay, from now on, I'm not going to take that trade anymore. 3 trades later, you've forgotten that lesson. So this is a really good way of just reviewing the day and making sure that the mistakes that you made you can learn from. It's quite a good practice for school kids to, at the end of each day, just do spend 15-20 minutes going back over what they did, because then the knowledge is internalized better. It's kind of the same with trading. In fact, it's exactly the same in trading. If you go back over the day and write out, okay, what did I do wrong here? What did I do right here? It's going to be retained that little bit better. So I put in here on January 16th, so this was yesterday for me. Mistakes. I think I got in early a few times. Okay. What is the lesson that I can learn from that? So the lesson I learn is that I can be nice English. I can be a bit panicky to get in. Some trades I get in early and they cost me, but they never cost me when I get in late. And this was the big thing I'm trying to implement right now, that waiting for that extra few seconds is probably never going to cost me. I'm either going to miss the trade, which will be really frustrating, but I'm not going to take a loss, or I'm going to get in when I'm 100% certain it's a good trade. This is a bit of a difficult one. This is one I'm working through right now, so I'm not as clued up on how to resolve it. But some of the steps to resolve, I'm trying to be a little bit more patient on entries, and there are times where I am doing that. Might be better to look back at another day. So here we go. So January 11th, this was a big mistake day for me. I had quite a big losing day on this day where I missed a really good trade, then I took some bad ones. So mistake one, I had a perfect feeling about a trade setup, but had some gray area doubts about it. It felt perfect. I was searching for why it shouldn't be a trade. In the end, I didn't take it because I didn't have a set rule on using previous levels and I didn't want to make mistakes. Okay, I actually did the right thing. I wasn't certain, and this is a big thing that I'm going to talk about in a second with gray areas. If you're not certain, if you have a gray area in your trading, don't take the trade. Write it down and then review it. So the lesson, I need to use these gray areas as a way to improve on my trading for the future. I had this exact gray area written down from a previous day and I'd not acted on it. So the lesson is, hey, you knew this was an area that you were weak at. Why have you not gone and studied it? Why have you not gone and created a black and white rule for this situation? So steps to resolve, have a set black and white rule for this scenario in the future. And in this instance, yes, we can use pre-levels from previous day and key standout levels from daily charts. Okay. So, a few more lessons, I won't go through that, but the key is here. Write down your mistake, write down the lesson, and write down the steps to resolve. And then you can use these steps to resolve to set your goals for the next day. So if you've just uncovered, if you've gone, okay, you know what, I made this mistake where I keep on getting in early, and you devise some kind of somewhat robotic strategy, I guess, to make sure that you don't get in early, your goal is to implement that strategy the next day. You've taken a mistake, you've learned the lesson, and you're directly implementing the steps to resolve. That is like fast tracking how you can get better at trading. Now, another thing I do in my trading diary is I mark out the easiest trade of the day. And the reason I do this is because I want to make sure that the best opportunities every single day that are really straightforward and easy to take, I am taking part in them. And we can see that recently I've actually been doing a pretty good job at these, but not always. And the more you do this, the more you go, what was the easiest opportunities? You can see, some of these, they're very, very similar, unsurprisingly, to all of my other trades. This, again, it just strengthens that internal knowledge of what your best trades look like. So finally, moving on to gray areas. And like I said, this is something I have been implementing recently, but I think it is an absolute game changer in how you look at improving trading. Often, a lot of the mistakes that we make, whether it's B game or C game, come down from an uncertainty. For me, for example, I had an uncertainty as to, I'll read these out here. How important is the 50 EMA? Do we need a tag? How much can it break the 50 EMA and still be a setup? How much does it need to break by originally to be a setup? Okay, so I was applying kind of random logic on the fly. I was like, well, maybe the 50 EMA isn't all that important for my strategy. Maybe I can let it break by a lot more. Maybe it doesn't need to tag the 50 EMA. When you've got all of these conflicting thoughts and ideas, it means that you are having to use the logic thinking part of your brain under intense pressure, time pressure, and money pressure. And that means the emotional part of your brain just comes to life and takes over. Because it's going, we can't do this right now. There's too much emotion. There's too much pressure. We cannot think logically. then your chimp takes over, and then you make mistakes. You're either going to make the two common ones, fear of missing out where you take a bad trade, or fear of taking a loss where you don't participate in a really good trade. And that all comes down to not being certain on something. So this is what gray area trades are. So what I then did was I went back through my EMT journal, this one we looked at first of all, and what I did was I went back through and I realized that 95% of my setups at least tag the 50 EMA. Simplify it, and it has to. I might miss one trade, maybe two trades might miss 1 or 2 trades a month, but it means I'll never make a mistake on it. 90% only break by 4 points or less. Okay, so therefore we can say that if it breaks by more than 4 points, it's probably not a setup. The ones that broke by more, I got in later and played more like a breakout play, waiting for a candle to hold above 50 EMA. So I went, okay, I can now make this black and white. If it breaks by maybe 5 points, give yourself a little bit of wiggle room in there. If it breaks by 5 points or more, we have to wait for a candle to close back above the 50 EMA for a long or below for a short. Now I've got a black and white rule for that. And then finally, 90% of my setups have some daylight between the 50 EMA and price. In other words, they've broken the 50 EMA and they've given a push before coming back down. We can simplify this by, again, either waiting for daylight or for 4 candles of consolidation holding the 50 EMA. So there have been times where it's broken 50 EMA by like 5 points. I've gone, this could be a setup. No, we've got to wait for a bigger break than that. And then the next gray area that I looked at was, should I take profit earlier to lock in a higher win percentage? My thought process was, well, it doesn't always go to my final profit target, so I should probably take profit out early and lock in wins. Well, the problem with that was the data showed that my win percentage actually remained almost identical, letting my targets hit. And the profits that I missed out on was made up by the extra amount that I made the other times they hit. And I found this out by simply going onto here and going onto, I think it was this journal here, and going, my risk reward is 0.93. That doesn't seem great. And when I then went onto I created some robotic back testing where I went, okay, I'm going to essentially either let the target get hit or get stopped out. My risk reward was 1.43, but my win percentage remained really high. So this gray area of me being in a trade and being like, I don't know if it's better to let it hit my target or to take out a little bit early if I feel like the price is going to reverse. Well, guess what? Emotion and chimp come in. Now I'm looking at the P&L and thinking, if I don't take it off here, I could miss out on $400, $500 of profit. And that decision is then taken away from any kind of logic and it's taken into the emotional realm. And the reason for that is we don't actually have the answers behind us. So a really important thing that I do now whenever they come up, and as you can see, I've only got 4 notes on this, and that's because I kind of did a bunch of them at once. But whenever I get something come up where I go, this feels like it could be a trade, but I'm not sure, I'm going to note it in here. And then I can use my data to look back through and go, okay, this is something that I should probably try to find a way to study it and to give a complete black and white answer, or to look at things logically after the market is closed from a slightly more, well, slightly less emotional standpoint and go, okay, this thing that we're considering, should it be something, yes or no, and then make it a black and white rule. Once you have the black and white rule, worst case scenario, you take away some edge, but likelihood is like this here, if the resistance point matches a previous support, does this count for me? And I've been going yes and no depending purely on how I felt at times. Well, I've now kind of switched that and gone, we've either got to have a definite yes or a definite no. And I'm probably going to look back through charts, get an idea, and then say either yes or no. And that way, when it comes up, I don't have that emotional fear come in where it's a case of I don't want to make a mistake by not taking a trade, or I don't want to make a mistake by taking a trade. So that is my complete journaling process. It sounds like a lot. I'm going to tell you now, it isn't. The Excel spreadsheets I do as I trade. So every time I take a trade, I pop in the numbers, do that automatically. I take the screenshot. Sometimes I take that screenshot immediately after the trade. It really depends on emotionally where I'm at. If I've taken a couple of losses in a row, I might need 20 minutes away from the screens just to reset myself. If I'm still in a trade and I'm doing it all, then I'm waiting for it to close. Sometimes I'm just ready the moment I'm done to be like, sweet, okay, let's screenshot that and be done with it and put it in. This takes seconds. The Evernote stuff takes a little bit more time, but because we've already got a lot of the screenshots, this part here, this is probably the longest process. Each one of these might take 2 minutes. So if I have 5 trades in a day, it takes 10 minutes. My my trading diary where I put in the mistakes, this takes probably 5-6 minutes. And then finally the gray areas. Well, this is just when it comes up. So right now I've got this. So now I want to actually say, actually, I want to go and see if this is something I should implement or not, because I know it's going to improve me for the future. So journaling is still only taking me 30 to 45 minutes a day, and a lot of that was kind of used up when the market was open anyway. Journaling is not something that is difficult. There's no excuse not to. You get free information. You like this Evernote, I think costs like about, I can't remember, it's like less than $10 a month for the advanced version. Excel is kind of free, I guess. So you can do it incredibly cheaply. You get so much data and information. This is how you improve as a trader. People who aren't journaling to any extent of this, they're giving up massive edge. It's not simply putting in your winners and your losses. It's not simply putting in your knowing what your risk reward and your win percentage is. It's being able to understand what your best trades look like, where your mistakes are, and using all of the information you have to find out where you can improve. If you do that every single day, you will make massive improvements, way bigger improvements than you can do by watching YouTube videos, watching people live stream, and so on. So I hope you found this useful. I know it's super long and most people probably didn't get anywhere near to the end of the video, but if you did, let me know in the comments below. Really appreciate it if you like this video, subscribe, and yeah, I'll see you again in the next video.